Hi, this is Patrick Curtis. I'm a partner with Rubino & Company. We are a public accounting firm in Bethesda, Maryland. I'd like to spend a moment just talking to you today about conditional grants or conditional contributions that are received in the form of government grants. There has been a lot of variance in the way that these things are accounted for over the years, and the FASB recently issued some clarifying guidance to new revenue recognition standards, which I think will clear up a lot of the confusion that's been seen in the industry. So there are a couple of steps out there, and I'm just going to give you a couple of real quick bullet points. There's a wonderful article on our website. Feel free to go there, www.rubino.com. But there's a two-step process. A grant is conditional, and number one, you need to figure out whether or not there's a barrier that has to be overcome. And the FASB puts out some very specific things about what a barrier is. But the important thing to note is that a barrier includes things such as cost principles, cost allowability, and whether or not those costs meet the terms of the contract terms and conditions, of grant terms and conditions. So actually having a government grant then becomes the cost principles are a barrier to revenue recognition when you have a government grant. And the second thing is whether or not there's a right of return for any funds that are advanced. And anybody who works in the government sort of arena knows that money that comes to you from the federal government, unless they're allowable costs, it's going to be returnable. So if you look at those two things together, you're going to come to the conclusion that a grant is, now there have been some other changes that the FASB's clarified, and you would not account for this type of transaction as an exchange transaction. It's really going to be accounted for as a contribution in your financial statements, but as we all know, a conditional contribution is not recognized until the condition is met. The bottom line then is that you're going to recognize the contribution as revenue when the related expenses are incurred. And just to sort of put a little bow tie on this, what you can do is you can elect to use the simultaneous release option, which is very similar that you would have found under FASB 116, 117. And now what we're saying is you can use this with respect to government grants. So if you elect to have the simultaneous release option, you're just going to put it in the unrestricted column, which makes life very easy. So that's it. Please check our website, rubino.com, and thank you for your time.